Hello, my dear friends. This is CA Shivashish Kannani, and today we would be discussing a very important and interesting concept under GST law. Whether ITC can be taken on a immovable property, that is hotel or let us say guest house, which is located in a different state where we have taken the registration, whether ITC can be availed in that case. Let us say a company which is registered in state Delhi and it sends its employees, or let us say director goes to another state for their stay, and that landlord charges them GST for their stay in a different state, let us say Maharashtra. The property is located in Maharashtra and the landlord charges GST on that. Whether a company which is sitting in Delhi can claim the input tax credit of the GST which is charged on the property which is located in Maharashtra, we are going to discuss this concept. For the ease of understanding, I have created case studies and let us try to find out the answers with the support of a recent circular which has been issued. Even though the circular has been issued on a different context, however, we can use the ratio of that circular to determine whether, in this case, a company which is based in Delhi can claim the input tax credit for the rent which has been charged by a landlord on a property which is situated in Maharashtra or any other state. Whether the company can claim input tax credit, come, let's see. Now we are going to discuss two case studies. Availability of ITC on renting of immovable property. Immovable property means hotels, guest house. Case 1. So let us say a supplier is into the business of renting of immovable property. He rents out immovable property across India and the supplier is based in Delhi. So he has his office in Delhi and he has properties across India. One of the property of that supplier is located in the state of Karnataka, and a company which is based in Maharashtra approaches that person stating that our employee tour, or let us say director, are going to visit for the purpose of business in the state of Karnataka, and for that reason we need a property in the state of Karnataka for our employees or directors, as the case may be. So in this case, first we have to determine what type of tax is going to be charged by that supplier who is having its office at Delhi. However, the property of that supplier are located in multiple states, including Karnataka. So first we have to see the location of supplier. The location of supplier is Delhi because the supplier has its registration in the state of Delhi. Now, the second thing which we have to see is location of immovable property, where the property is located. The property is located in this case in the state of Karnataka because the employees or the directors are going in the state of Karnataka for their business and official visit. Now, in this case, the type of GST which is going to be charged is IGST because the location of supplier and location of immovable property, that is place of supply, are in two different states. When the location of supplier and the place of supply in renting of immovable property, the place of supply is the location where the immovable property is located. In this particular case, immovable property is located in the state of Karnataka, and accordingly IGST is going to be charged. In this case, the supplier who is sitting in Delhi is going to raise an invoice stating that I am charging IGST, and he is going to mention place of supply as Karnataka, and he is going to bill that invoice to a party which is located in the state of Maharashtra, because the employees or the director of that company is going for their stay in Karnataka for the purpose of business. Hope you understood that the invoice is going to be raised by the party which is registered in Delhi for the property which is located in Karnataka by mentioning place of supply as Karnataka, by charging IGST to a person who is sitting and registered in Maharashtra. So the place of supply would be Karnataka, that is the place where immovable property is located. ITC would be shown as eligible in GSTR 2B. When we pull GSTR 2B from GST portal, it says the ITC is eligible in this particular case, and accordingly ITC can be taken by the recipient. Now the rule is that if IGST is being charged, in that case ITC can be taken even when the property, immovable property, is located in a different state. Now coming to state 2. In this particular case, the supplier is located in Karnataka. He has only one property, and that property is in the state of Karnataka only. The supplier has taken the registration in the state of Karnataka. A recipient again from Maharashtra comes and says that my employees and directors are going to visit Karnataka, and for this stay I need a property. In this case, now let's determine place of supply. The place of supply is the location of immovable property, which is Karnataka. Now let's determine the type of GST which is going to be there. The location of supplier is Karnataka. Because the supplier is located in Karnataka, he has taken its registration in Karnataka. The location of immovable property is Karnataka. Place of supply is Karnataka. Since location of supplier and place of supply are in one single state, and accordingly the type of GST which is going to be charged is CGST and SGST. CGST and SGST, because location of supplier and place of supply are in one single state. In this case, when we are going to pull GST 2B, ITC would be shown as not eligible. ITC would be shown as not eligible, and accordingly we cannot claim the ITC in this case. We cannot claim the ITC in this case. Hope you understood. And now let me explain this further by way of the circular which has been recently issued by CBIC, and let me try to justify my stand. Now this circular has been issued by CBIC, circular number 184. The circular has been issued in a separate regard, wherein what was happening was that I am a supplier who is based in Delhi. I export the goods to Nepal, for example. For that export, I need the services of a transportation company. What does that transportation company do is that while issuing an invoice, the transportation company says the place of supply is outside India. Now the question came before the government that the supplier is sitting in Delhi, he is exporting goods outside India. The transporter company is also in Delhi, but it is issuing an invoice by showing place of supply as outside India. In this case, whether the ITC can be claimed, and the government clarified that ITC can be claimed. And let me show you in this particular case how we can compute these two situations parallelly. In our case, the place of supply is in Karnataka. The property is located in Karnataka. I am registered in Maharashtra. And the second case, which is being dealt by this circular, the location of that exporter who is exporting the goods is in Delhi, and the place of supply is outside India. So even in this case, the place of supply is not following in the state where I am registered. The government clarified that ITC can be taken even in that case, since place of supply is not a condition. Let me run through the circular. Now we are coming to the third point of this circular, which is very relevant for our discussion. It says, now let's read this paragraph. Section 16 of CGST Act lays down the eligibility and conditions for taking input tax credit, whereas Section 17 of the CGST Act provides apportionment of credit and block credit under circumstances specified therein. The said provision of law, Section 16 and 17, does not restrict availment of input tax credit by recipient located in India. The recipient, as in, for this particular example, it was the exporter who is located in India. If the place of supply of the input services is outside India, the place of supply was outside India, the transportation services place of supply outside India. Thus, the recipient of these services of transportation of goods shall be eligible to avail input tax credit in respect of IGST so charged by the supplier. The supplier is charging IGST. The transportation company is charging IGST, subject to the fulfillment of conditions laid down in Section 16 and 17 of the CGST Act. Now, what does this circular brings out? that place of supply is not relevant. Even when the place of supply is outside India, the ITC is eligible. Similarly, even when the place of supply is in a different state, ITC is eligible. And in this particular case, when IGST is being charged, I am eligible to claim input tax credit of the same. With this, I end this video and hope you understand what I was trying to explain. I would request you to subscribe and click the bell icon of this channel so that I can keep uploading wonderful and useful videos for your understanding. Thank you very much. And I am posting this case studies in the description of this YouTube video link. Thank you very much for watching this video. Thank you.